Good morning, traders. Today it is Wednesday, the 5th of June, 2013. I'm your host, Adam Harris, for today's Midweek Market Focus episode. It's about 8:05 in the morning, and I'm presenting the Automated Trading Mastery in about 50 minutes. So I'm going to try and keep this as short as possible today, but as focused and in-depth. So I'm going to start with the stocks overview. We're going to have a look at what's happening there, and of course we're going to go through currencies, forex, and then we're going to just discuss the concept of differentiating between profit and probability, which I think is quite important to do. So let's dive right in and have a look. So clearly, for those of you who are trading stocks, you can see that the FTSE itself is actually in a downtrend at the moment, but please let's clarify that this is actually a phase 2 and not a phase 1. Here is the previous low, and so we're actually just currently in a daily pullback. This is relatively healthy. If you go to the weekly, I'm just going to show you the weekly chart here, you'll see that we are pulling back at this point just into the moving averages. So this is relatively normal, and in fact much overdue, so we need this in order for the market to continue trending upwards. So I think that might be particularly difficult for a lot of people to understand that the market is more than likely going to turn around and continue upwards. The market is so bullish. If we look at the monthly charts, this is not actually a high test. Let's be clear about that. This is a high test would normally have a smaller body. This is not a high test at this point in time. If we break the low of last month's candle, if we break the low, then all that is a monthly pullback. It's not a reversal. It's not a downtrend. I mean, I know that I'm always the first one to go on and on about the cycles. Absolutely. But, there's a couple of things that I have to get at the moment, and this isn't necessarily a bad thing. We've broken through that level. Yes, we've pulled back under it and closed beneath it, but we're probably going to break through it. So it's really just about this being a pullback for the foreseeable future. Okay, you can see how far away we are from the moving averages at this point on the monthly time frame. So we're going to go compare the FTSE on the monthly. We're going to go compare the FTSE on the monthly, separate from some of the other stock markets around the world, some of the stock indices. And so at this point, price is just looking as though it's potentially stalling, but not necessarily in any bad shape. So if we look at the weekly, you'll see we've got a nice little phase 2 happening here. We're pulling into the moving averages. We've got a long way to go before we can actually break this. Now, when you step back a bit, you can see that we had a previous level of resistance, which was 6,000. We broke through that. And so actually it would be acceptable for us to come back and test 6,000 as a level of support before we continue onwards. And that's really a question of just a point, and not necessarily as easy to say, well, when would that happen? Well, that would be more like a question of just at the point at which we get there in the chart, then we'll probably reverse. So just to reiterate that this is currently a pullback and is not necessarily a market crash. It's mainly because I'm seeing so much of the bullishness is remaining in a lot of the markets that, and in terms of timing, we're really only expecting that turnaround, the long-term sort of downturn to start occurring, start actually trending downwards around about January next year. So we've got quite a bit of time for that to happen, and it's just been so bullish at the moment. If we compare this particular candle over here, we'll go look at the S&P, the Standard & Poor. You'll see that this is particularly bullish. This is looking really nice as well, and this has also got to do its own breakthrough of resistance and a retest of support. So if you look here, it's much more bullish in the long run, and we're probably going to come back and test that at some point. If we go and check the Dow Jones, you'll see the same thing. It's still looking relatively bullish. In fact, these things can trend for a long time, so we're still on our way up there at this point, and not so much of a high test. A lot of these are not high tests, so be careful not to interpret them that. This is the Nasdaq. The Nasdaq has not even produced much of a bearish candle at all, and all I'm doing is when I connect the highs, it's really just to see. I mean, there's nothing at this point, but it's really just to see if there is any particular. It's more like a channel than it is a trend line, the way that I'm treating it. So no, I think we're pretty good at this point in time. So we're just experiencing, and here's the Russell 2000, which of course also the same thing. So what you could do is when you look at all the different stock indices, you'll see that the bodies of the candles from last month are not all necessarily bearish, and actually none of them is really a high test. But the weakest of the whole lot has always been the FTSE. And so I anticipate that we'll get wilder swings on it. But so what I'm going to do at this point is treat this just as a pullback on the weekly back into the moving averages. And what I'm looking to see here is a nice little green candle in this particular area here. Okay, so just to be more specific, I'm looking to see that happen. So it's worth your while in this area here. It's worth your while to keep checking the weekly. If you have any doubts about whether the weekly is potentially turning around, you would just have to check that basically every Friday. End of every Friday, which is this Friday is non-farm payroll, by the way. Please, guys, non-farm payroll. I know a lot of people are going to trade anyway because they just disregard the whole thing, but I advise you to just stay away. If you have any open trades, end-of-day trades, you can leave them running if you like. Make sure your stop is in place. If you're doing intraday trading, you've got to make sure effectively that you're out of your trades by about 10 o'clock. Because they normally go to sleep by then. Depending on how sensitive the market is, they can just stall at any time after 9:30. So if you're done by 9:30, that's fine. You're good to go. But yeah, just be aware that non-farm payroll's on Friday. And my recommendation is that you don't trade at all during that period at all. So in fact, you just give away this Friday as no trading. Spend it doing something else, like watching the midweek market focus again or something. We're looking for a green shoot in here to indicate that the buyers have returned, and that's what I am anticipating. And so we'll just keep an eye on that. Let's go look at the various other ones. We've got the S&P that opened up yesterday. That's pulling back down into the moving averages. We'll assess that. This is on the weekly side. And I'm expecting the market to pull back at least down to about this area for each of them. So the fact is that we haven't even touched the 10-day moving average on the weekly, but we have started a weekly phase 2. That tells me that it would be reasonable to expect price to pull back at least to, and in fact this trend line that I've drawn in would probably act as support going forwards. We look at the Dow Jones, same thing. We haven't really got into these moving averages yet. So I'm still anticipating price to return at least to the 10, if not a bit further, and produce a green shoot. So I think basically we're looking at approximately 2 to 3 weeks before we can get back into this trend, before the trend starts to kick its way back into an uptrend again. Okay, it's the same thing over here with the NASDAQ. And the Russell 2000 as well, which is quite bullish. You'll notice it's not really going very fast. So what will happen is it's not just a question of price pulling back, it's a question of the moving averages starting to climb up towards it again. And once it connects, we'll look and see if that's the case. If we get any low test on the weekly, so on a Friday, if we're looking like we're getting a low test off one of these moving averages, especially if it's a nice little green low test, we are looking particularly bullish and ready to kick off. Okay, so then what you want to be doing is going through all your stocks and looking for the ones that are in similar positions, and if they're offering trade setups, you want to be placing orders around those trade setups. So the point is that the market is still looking bullish. It's got a lovely pullback. As I said, I'm not really expecting a downturn at this point until at least January next year. So, and we'll assess it as it is, but the market's looking continually bullish. Now, I understand that what often happens is there's this fear of like, well, what am I going to do? Well, what am I going to do if the market just crashes? This is something that I get asked a lot. What am I going to do if if the market just crashes? So the absolute worst case scenario is that you're down 1% out of any trade you have open at that time. Okay, so you may not have trades open and exposed. You may not have a lot of trades. You may not have any open. You may have one that's exposed at 1%, another one that you've moved your stop up and you're exposed for 0.5%. But the absolute worst case scenario is that you're stopped out for 1% on all your trades at that exact point in time. And I just don't think that that's going to happen at any point soon. We are going to pull back, and once I see the screen shoots in the weekly, I'm going to be pretty confident that the daily is already at that point turning and is on its way up. So, and of course, just to drive that home, because it's a very fair question, if we look at the previous times the market has turned down, I'm now on a monthly chart, and I really just want to point out that it took a while for the market to actually stall. It took 6-7 months for the market to stall. Okay, so we're looking at that. Even at this particular point here, we went up to high. We broke the previous low. That was over a 3-month period. Over the next 2 months, we tried to climb back up again. So in other words, even if you had been caught down here, you still had a chance to make some money there. And then as we stalled and started to head back down again. So this all happens over about 6 months. So the fact that, you might find you get possibly get stopped out on a freak news announcement that affects the whole market, but the fact is that your worst case scenario is, and this is why we don't risk more than 1%, your worst case scenario is that you will, whatever your mass open trades are at that particular point in time, will be that. So I'm hoping that what will happen is I'll be able to do a midweek market focus. We'll be able to track the evolution of this as it goes closer to the time. So for the meantime, There's still opportunities to be made. We've still got a long way to go. The market itself is really looking bullish. This is not collapsing. Look at the individual bars. Even though we're on the FTSE, which is the weakest, the bars are not really falling through. They're not very big. They're pretty healthy. I mean, they're actually smaller than the bull bars on this side. So it's a nice and healthy pullback. Okay, it's just a question of how far it's going to go. And I would keep looking at my weekly. I've got my 10 and my 20 here. I like it to come back to the 20 because I think that that's a healthier pullback, which means it can go up further. That means we make more profits on the next phase one. But nevertheless, I will start waiting for green bars, green candles on every Friday. So based on the fact that we've this is how far we've gone in, say, 2 weeks, I'm looking at potentially 3 or 4 weeks. Okay, of pullback. So my suggestion to you is either don't trade anything at all. Excuse me, gonna have a quick drink of water. Don't take any stock setups at all. Probably is just best. Just wait for that pullback. Just let it go. Okay. And at the same time, or spend the time going through your charts, just analyzing them and shortlisting the ones that you think are the most bullish, that are looking the best, and look at their behavior. Let's look at something like Diageo, which is, let's see how that is on its in terms of its cycles. That's now pulling back already. We've produced a lower high, lower low on the weekly. But the key thing here is actually, will it hold support here? So if this manages to maintain support at this particular level, then it's just holding. Then it's just support. Okay, that's not necessarily a bad thing. Alternatively, we have a pullback that's going to happen down to the monthly if this pulls back further, because what you can see when you look at the weekly is that we have so far got a high, a low, a lower high, lower low. But it's very important that we have a decent lower low. If we manage to stay above this level, this is actually just ranging, and then it'll consolidate and it'll eventually kick off when the time is right. If, on the other hand, we find that this continues to drop down further, for example, we'll look at Associated British Foods as well, then what we're entering is just a monthly pullback. And that's great. And I say it's great. It's horrible if you were caught in the last pullback, but it's great if this is now, because this means that you can be prepared to be making money in about a month's time. You can start looking for trade setups to go long. And we need that, because then we have that nice long run up. So we've been overdue for a pullback, and it's really good to have this happen here. So we were looking like we want to pull back to the 10 moving average, around about there at least, and then before we bounce and turn around. And that, to me, is a worst case scenario with Diageo. Let's have a look at Associated British Foods. You can see here, I mean, just how much that's kind of moved its way up. It's still looking relatively bullish on that side. Look at individual candles. Even here, we've got a similar type of thing. We've potentially got price holding above a particular support level. And so if that can continue to hold, we're looking to see green shoots, which is what we're forming currently in this, in the buy zone, in between the 10 and the 20. This is looking particularly good. So we might, in fact, find that the markets don't even pull back that much. They pull back for a week or two, and they're on their way. It's really to do with monitoring them this week and next week to see what happens. We might find, for example, next week it drops down, touches the moving average, and climbs back up in low test. And that's it. And that's next week, and it's ready to go. So ideally, it's a green candle or a low test off the 10. Okay, I would make an exception for a low test of the 10 moving average, but I have to say a green candle at this point, anywhere from around about the 10 to the 20, constitutes a nice, healthy return of the buyers and ready to continue onwards. Okay, so that's my advice to you guys, is just keep an eye on it. You might actually find that the earliest point at which this is ready to turn around is by next week Friday, and at that point onwards it's ready to kick off. Now my next midweek market focus, I'm afraid, is going to be in July. I'm not back. I'm probably going to be away on leave from about the 13th or 14th, which is next week sometime, and then I will be back around about the 1st of July and do my next midweek market focus in July. Okay. So then let's go through and have a look at the currencies. Now, there's a very important idea that I want to kind of pass over to you today, which is the idea that, and this is why the topic that I was introducing today is sort of differentiating between profit and probability. We're always going on, and traders around the world are always going on about risk-reward, as in, try and look for trades that are 3-to-1s or, that are offering a greater potential reward than to risk. And that's true. That is something that you should always be doing. However, what I find is that in many cases, people see that price can potentially go up to a certain, there appears to be no resistance, and they see the price can run up to a particular level, but at the same time it can blind a person to what's actually happening right now in the chart, if the chart is looking weak or strong. So really what we're trying, the ideal way to approach it, the healthiest way to approach it, is to first of all identify a chart that's trending, and then look for setups on the trending chart. And actually by default, a trending chart will offer you greater, by default, a trending chart will offer you greater than 1-to-1 risk reward, because it's the momentum of that chart, because it's trending, is so much stronger that the distance it has the potential to move is much greater. So if you understand that, then that explains why it's worth your while. It's much more worth your while to really only trade, even if there's only one chart that's trending, it's worth your while to trade that chart first, rather than looking for trades in other charts. And it's so common for me to see beginners trading charts that appear to be offering them profit that actually is unlikely to be there. So let me demonstrate this by way of looking at, let's say, the pivot strategy. So what I've got on my one is I've reordered it a bit. Not a big secret. I've put in my daily. I've got a lower time frame, my 4-hourly. Personally, I'm of the opinion that I won't trade pivots unless I've got an iron where the 4-hourly is going. And then, of course, I've got my 5-minute chart, which could also be my 60-minute chart. Okay, so really, because with pivots, what's beautiful about the pivot is we're just trading a move from one, as the chart breaks through a level of a temporary support resistance level, it works its way up to the next level. That's really it. So the pivot levels are derived from previous days' high, low, open, and close, and they provide a central pivot, which is almost like an axis, which constitutes, the central point of the previous day's activity. And so if we're then breaking above it, we're probably moving upwards to the upside. So it's okay. I mean, it's an okay theory. I think it's incomplete, but my advice to you is to always be trading the pivots in the direction of the daily trend. So if you can look at my 4-hourly here, you will see that we are trending upwards. So for me, regardless of what this indicator says, regardless of what it says here, whether it says buy or sell, I will be looking to buy, because that is where the trend is. And what happens is, just so that you're aware of how could this possibly say sell if the trend is heading upwards, is it's really based on the hourly trend. So please understand that if my 4-hourly chart goes into a downtrend, my 60-minute chart will go into a downtrend. So what I mean by that is, if my 4-hourly chart goes into a phase 2, which is just a retracement, by the way, in an uptrend, what will happen is that my moving averages will cross over potentially on my 60-minute chart. And so what could happen then is that my 60-minute chart says, no, it's a sell day, it's a short day. And actually all that's happening is I get a 4-hour retracement. And normally and invariably, you get in on the trade, you sell at this point, because that's where the pivot is. So instead of it breaking through the pivot, which is what you expect, it bounces off the pivot and kicks off a phase 1 again. So that's one of the reasons that I would be very, very cautious about that. So normally I try to make sure that my daily is in phase 1. So what you can see here is, if I take away, don't worry about the moving averages that much. Don't worry about them that much. What you're really looking to do is to make sure that you're in an uptrend, which we are in this particular case. How do I know that? Well, because I can see that we're producing higher lows and higher highs. And I can see that we're also pushing up. This was a phase 1, so I can see that we're also pushing up at the end of a phase 1. And if you look on the 4-hourly chart, you can see that what we've got is we had price come up, produced a high test, bounced again, produced another high test, and is currently producing a high test. So it's encountering resistance there, and so that might trigger a phase 2 pullback on the daily, but we're still in an uptrend, and we're looking really good actually as trends go. This is why trend lines can be quite helpful, because if I put that in, I can get a sense of how far away we are potentially from that trend line. So we might find that we have to come back down to about a level like this. And so we're overdue for it. So this might cause me to hesitate taking a pivot long. I might, as a master trader, potentially take it short. So the thinking is that you're provided with more trading opportunities if you can trade, if the 1-hour chart allows you to. But the problem I find is that in a trending chart, which is the best probability, it's actually the best probability, you will find that your win ratio of the number of trades you've been winning will increase if you are trading in line with the trend that you see on the 4-hourly time frame. Okay, and all you really have to do then is make sure that you're in phase 1. And so the moving averages are a very nice organic trend line. So you'll notice that once it bounces and starts heading away, that it's going back into phase 1. So if we look at something, for example, like Japanese chart, the dollar yen, we're currently in a phase 2 on the daily. So for me, that's it. I do not trade this. I won't trade it at all because it's in a phase 2 pullback. So I am prepared for a trading opportunity to go long. I am anticipating that this will bounce or go long, but this is right off the bat just a scratch off my pivot list because I can understand that the 4 hourly is in a downtrend. And yes, if you stuck a gun to my head, I could trade it short. You can see here, look how beautiful this is. Look how price is just bouncing, encountering resistance in its temporary downtrend, and it's going down. So the win rate on that is much higher because you're trading in line with the daily. That's a key thing to take away from it. And you can see that my 4 hourly is taking care of that phase 2 on the daily. So that's one approach. But generally speaking, I don't know how long that phase 2 is going to be on the daily. It could be 3-4 days. It could be a whole lot more. So I'm very cautious of that type of pullback. Let's have a look at something else. So let's have a look at a chart that's potentially trending quite nicely. We've got a strong daily downtrend on the Aussie dollar. So we've had a little bit of a bounce lately on that because we hit a strong level of resistance. But prior to that, we would have had, again, a very high win ratio on the way down because we're going in line with the trend. So what happens is it'll either break through it or it will encounter resistance and head through it and head back down, so get bounced off it. But generally that's because we go in line with the trend. So your first prerogative is really to find a trending chart. So if you take a chart like Euro Swissy, the problem with this is that it's actually stuck in a range, and I'm going to show you this on my normal charts. It's actually stuck in a range. So I'm not going to say that you're not going to win a pivot trade here. I'm saying that yes, there's a very good chance you could win. But at the same time, what you need to do is sit back and go, well, what am I doing here? Because at this point, this chart is ranging. So unless I have a lot of experience, it's a bit of a crapshoot. I don't really know if it's going to go up or down. I have no idea which way it's going to go. Because it's in a range. So if you can read a range, well, that's fine, but there's no trend here. So really it's just about being able to determine that you have enough room to run and that the momentum is very much with the wind at your back, that it's going to push its way through those pivot levels, and you can take those trades and you can increase your win ratio. And at this point, I haven't even mentioned the risk reward. Because the problem here is that even in a completely sideways market, which is junk, this is going to tell you to buy or sell, because that's what it does. It just looks at the moving averages on the 1 hour chart and it says, well, if the green, which is the 200, is or the 50, which is the red, is above the 200, then go long. And if it's below the 200, go short. But it doesn't really say to you, you know what, this market's going sideways. And actually, the worst part about sideways markets is that the moving averages crisscross over each other the whole time. When the market's going sideways, it just crisscrosses over each other. So you're going to get buy, sell, buy, sell, buy, sell. And so you need to overcome that, you really need to pay a lot of attention to what the daily chart is doing if it's trending. And you can see here that this chart is ranging. Okay. It's stuck between that. Okay, it's ping-ponging between that. Right. And in fact, it's really been ranging from about there. So it can't really seem to get past that level. And here it's probably going to come back down. We'll have a look. There is the potential for it to break out that range. I can certainly see that. But when it's broken out, it will hold on the outside of the range. If it keeps coming back into it, then it's not out the range yet. And so that's something I want you to just please be aware of. So actually, it doesn't really matter about the risk-reward, because at that point you are gambling. You're going, well, I could win this much. The chart's going sideways. I know I shouldn't really trade it, but you know what? The thing says, and it's offering me a 2-to-1, I'm going to take it. And then you lose. And then you take 10 pivot trades and you're losing, 8 or 9 or 10 out of them, because every chart, even if the chart is going sideways or up or down, is going to be giving you a direction. It's going to say to you, go this way or that way. It's going to be spitting out a risk reward, but it's not really going to be offering you probability. It's just telling you that, oh yeah, I think you should be going, the 1 hour charts, moving averages are in this order, so I think you should be going long, and therefore the risk reward is such and such. And so you could see the difference between the pivot calculations. Like here, we've got the central pivot, and there's my stop, and there's my target. And then yesterday's one was here, and look at the gap between that. So I just, I'm looking at that distance there, I'm going, how easy it is to get your stop hit when it's like that. So for me, it would seem smarter, for the most part, to be able to find a chart where, for example, here the trend is clearly heading up. I look at this. There's just beautiful, beautiful cycles. It's a no-brainer to me that this is the chart that I would like to do as much as I can of. But you will see that every day the pivot calculations are different. Sometimes it's a 1-to-1. Sometimes it's slightly less than 1-to-1. Sometimes it's 1-to-1 here. Here we've got greater than 1-to-1, less than 1-to-1, greater than 1-to-1, equal to 1-to-1, equal to 1-to-1, and so on and so forth. Here it's greater than 1-to-1. The point being that your chances of winning and losing, or just your chances of winning on this chart are just much higher. So you really have to weigh up if it's all about risk reward for you or if it's more about a win rate, because how much you're really winning versus how much you're really losing. I mean, your best pivots are offering you maybe a bit more than 2-to-1, but if you're losing 7 or 8 out of 10, you're still going to be down at the end of the day. Whereas if your average pivot trade is say 1-to-1 or even slightly less, but you're winning 8 or 9 out of them, imagine what that does to your bottom line. So what I would rather have you think is that you would trade probability of first. So you would first find a trending chart like this on the 4-hourly that looks this good, that you would look to see if it's reacting to a particular moving average. That helps you to identify those cycles, and so you're in phase 1. And then what you would do is not really worry so much about the risk reward of that setup, but what you would be doing is that if the risk reward is greater than 1, that's a bonus. Then that's all the more reason for you to take it. Okay, as long as this is in phase 1. And what you'll find there is that if you stick to those rules, your win ratio should be higher. So you should be winning 3 or 4 or 5 or 6 or 7 or 8. Sorry, let me repeat that. You should be winning 3 or 4 out of 5, or you should be winning 8 or 9 out of 10 because you're trading in the right direction and you're reading the cycles correctly. And not so much about that. And I think at the end of the day, I think you'll be happier because you've been winning more lately and losing less. Because 1% still hurts, even if the potential reward was 2. And then very quickly, I think you'll shift to the point of view that you would much rather win every pivot rather than the fact that it offers, 2-to-1, but you're getting your ass kicked on the other 5 you take, which is just in the end, it's not worth it. And predominantly, that's just it's very simple. It's a trending strategy anyway. So just focus on that. I've done this, I've said it before, but there's a lot of traders who have joined since the last midweek market focus where I spoke about that. Okay, so that was just trying to demonstrate why probability in many respects is worth more than profitability. So it's not just about what profit you can make. It's about the probability of winning. The profit is a bonus as far as I'm concerned. So in other words, if you end up making 3% on a trade, but you were prepared for 1%, then that's a bonus. And if that's your, because the market is not trending the way that it used to, so it doesn't offer you 3% per trade, which it was an average. It was normal back then. You might get 4 or 5% a trade. Now what you're doing is you're getting stuck with 1-to-1 or 0.5% or whatever. But the point is that your probability is still better if you go with that. And I would rather just get you focusing on probability for a while. Right, let's jump back to currencies. Have a quick drink. And I'm going to run through the charts. I'm going to take about 20 minutes, and I'm going to run through the charts I'd like you to focus on. So first of all, we're going to look at the dollar index, which is where I am now, and I'd like you to observe something. Okay, so this is partly because I want to explain what's happening with the euro. I want you to notice something here. We can see that price is trending upwards over here. We had a very nice uptrend, but particularly what I would like you to observe is the fact that at this point, price retraced 100% of that move up here. Now, what that normally means to me is this is a prelude to a ranging type of behavior. Okay, so what that means is we're actually beginning a range at this particular point, and we're still in the range. So this is a weekly chart, and we're not really out of this range until, that's a good way of putting it, that would define the top of my range, that would be the bottom of my range, because that's what happened. So I don't really think we're out of that range until we can break out of it, come back, and actually not be able to get back into that range. If we break above it here and we can't get back in, then we're out of that range. So if I then go to the monthly, I want you to see something here as well. You can see that the longer term trend for the dollar is generally down. However, it has started to range, and the reason it started to range is because what it did is it produced a high, a lower, a high, a low, a lower high, and then it suddenly produced a higher low, which is implying that potentially the trend was going to run up, but then it produced a lower high. So actually what happens is it doesn't really want to go to a new high, it doesn't really want to go to a new low, and it's just ping-ponging in between. Now, the potential is, yes, for the US dollar to climb. This is now the dollar's performance against the major minor currencies. This is now its potentially to climb up to this potential level here of resistance, a strong level of resistance. And then we could return down. So that cycle will then continue down. However, it's really not that strong. You can see that it's mainly going sideways. Not only that, but price hit this level and hit this level again. And so this might actually be forming a double top, meaning that price attempts to go through a level, tries to go again, and then returns down. So there's a very high probability that price is going to return to this level at least, which means dollar weakness across the board. But you can see that the markets are so messed up at the moment. I need to point something out to you. So return down to this level, and if it breaks through this level, it's very likely it's going to return down to the next level of support. Okay, so this is quite a crucial juncture where we're sitting at, because a double top here is a real fail for the dollar, and it implies a lot of weakness. And then what would happen is price would end up coming back down to this level. But first, we would just trade it down to this level, and then we might find this level of support is held. So we might see it's held there, it's held there. We haven't broken it since, since 2011 we broke through there. We haven't managed to go back below that. So if the dollar index can hold above this level, then we're going to continue to range indefinitely. And so I still think we're in early days with regards to that. But what I also wanted to show you, though, is if I go down to the weekly, first of all, point out the fact that that price returned quite a bit, and then we had a lower high, and then we managed to find support here, and then we continued up. So the signal for the ranging is the fact that we retraced too much, just too much for a healthy pullback in an uptrend. The next thing that happened was we produced a lower high. That's quite significant. The next thing that you could take out of that is we failed to break those lows, so we managed to find support here, and then we're trending back up to the top of that range. So you're not out of that range until you break either below it and you can't get back, or break above it and you can't get back. And also the other thing that ranges do, which is a very specific thing to them, is they have this horrible habit of breaching. They breach the previous high and then reverse immediately back in. So based on this, I know that we're still in this range. I know that because we've breached and returned right back in, and that's a ranging characteristic. So really the next thing is to see if we can manage to come down to this level. So we are going to be experiencing dollar index over the near future. And then we're probably going to break through to that and head down to the next level. And then it's really a question of, will we manage to break below that? So there's a lot of things that have to happen. We have to actually have we have to have the yen strengthen. So we need to see the yen charts pulling back down in order to weaken the dollar, because right now that's giving a lot of strength to the dollar. The next thing I wanted to point out to you is the volatility here. So we have a lot of people are really, really struggling, and I can't blame you at all. If you look at this behavior over the last few months, you can notice that we would have 3 or 4 months in an uptrend here, and the downtrend was pretty much red bars, and uptrend is pretty much green bars, and downtrend is pretty much red bars. And then you look at where we are now. You look at since 2011, and what do you see? You see a green bar, red bar, 2 green bars, 2 red bars, green bar, red bar, green bar, red bar, green bar, 2 red bars, green bar, 2 red bars, green bar. It's so messy, and this is the state of the currency market. So, that's kind of where we are, and that's just, it's so bad. Okay, so quickly, let's go to the euro and have a look at the similarities between this, please. I would like you to observe. When you look at the euro, it's similar in many respects to the US dollar, but on the other hand, even though it's temporarily heading down here, the longer term trend is actually up. And so what I'd like you to observe, please, is we still have that potential to run up to that. I'm not saying that it's absolutely guaranteed, but I'm saying that it's a very strong likelihood that we could run up to that. And it really depends on a couple of key things. The point is that the euro is showing a lot of strength. If we look at the weekly, I want to point out the similarities. First of all, the prices retraced too much, very similar to the dollar index. It retraced almost too much. It was in a very strong uptrend. It retraced way too much, and then it proceeded to bounce up and produce a lower high. So that lower high is based on this previous high over here as well, and then prices come down, but it hasn't broken the lows. Instead, it's turned around and started heading up again. So that is identical in spirit to the behavior of the dollar index, which retraced almost all the way, attempted to go produce a lower high, and then won't go below that low, and in fact broke up above that again. So when we look at that, we've got exactly the same thing happening here. We've retraced too far. We now tried to come up. We've produced a lower high, and we won't break any lower than this, and now we're heading up. So effectively, we now can confirm that this is in a range, at least until it gets to the top here, which is sitting about the 31.32 mark. And we don't necessarily want price to break through that unless it's going to find some sort of support. So what I need to see on my euro is, this will explain to you also why the behavior is so odd. So people who are trading the euro who aren't aware of this won't really get what things are happening here. But first of all, let's point out that the daily was in a downtrend. Please note how messy this particular part of the chart was. Very messy over here. 1 bar up, 1 bar down, all over the place. We found a bottom. We tested the bottom again. We started to climb. Price in particular broke all of the previous highs over there, the downtrend being finished. We then went into an uptrend. We produced a low to a high, to a higher low, to a higher high. So we went into an uptrend and we immediately broke that uptrend. So again, we retraced way too far from the previous beginning, and now we started trending up again. So this behavior, there is no set trend. It'll go into an uptrend, break it, go into a downtrend, break it, go into an uptrend. And the range we can actually define as this previous high. At this particular point in time, our range is sitting at the 3200, so we're heading up to that. The question is what will happen then. Now, because we saw the beginning of that range on the weekly, this is predicting, if it's similar to the dollar index, this is predicting that we will be ranging on the euro potentially for 6 months. 6 months. Right until the end of the year. Right until next year even. So be aware of that. What that means is that it will regularly breach that level and then potentially come back, okay, and then go all the way to the other side. It also means for those of you who are expecting this head and shoulders pattern to unfold, who believe that this is a head and shoulders pattern, which it isn't, what's going to happen is you're going to continually be disappointed, because if price comes down here and breaks this, it'll find this level of support because it's a range, and then it'll head all the way back up. So it'll trigger people short into the trade, and then it'll just reverse on it and come back up into that. To be honest, yeah, if I see price come down and break this low over here, this low, then to me we are in a new area and we're on our way down. If I see price come out, hits a level, can't get back into the range and head down, I will be the very first person to start shorting the euro. I have no qualms about that. And then if price breaks up here and finds support and starts heading up again, I'll be the very first person, obviously, to go long on the euro. Excuse me. But this is essentially what you need to ask yourself is, if the euro is so weak and it's going to crash, why is it not crashing? The reason it's not crashing is complex. It's a very complex situation, but essentially we have a dollar component as well, and the dollar is ranging. Right? The dollar is ranging against every single other currency. So just be aware of that, please. Okay, so and so really just for now, you've got to be very cautious. What you could do is you can do intraday trades. As long as you're aware of this range, you can do short intraday trades, but there's no trend. So please, this is not something that's going to work for you if you're an inexperienced or new trader trading snipers or pivots. It's not really going to work, and there's certainly no income generators on this. So I'm hoping that there's enough people watching this that you won't be trading this chart for a while. Okay, but let's go and have a look at the euro pairs, because the euro pairs are offering some opportunities. The euro is actually quite strong against certain currencies. It's quite bullish. In this particular case, we've got a nice little uptrend here. We've broken the previous, a couple of the previous highs, but we are finding some support here, and we are producing lower highs. So we're ranging on euro GBP. Okay, it's sitting around the 86 mark. This is our range now, and we're waiting for that to break out of that as well. So that's fine. Euro CAD is doing something very similar. The shape of Euro CAD is very similar to Euro GBP. Same thing. We've got a general uptrend. This one's actually looking like it really wants to break past that previous high. I'm concerned that's a range. It's broken this as well. I'd like to really see this pull back, but the potential is for this to climb. Euro Swissy, as I mentioned when I was talking about the pivots, is definitely ranging. You can see that there is a price reaction here. It seems to fail to get past that. And a lot of that has to do with the fact that the Swissy is ranging like a crazy person, and the dollar index is ranging as well. So you've got the dollar index ranging against most of the currencies. You've got the Swissy ranging because the market wants to strengthen their currency and they want to weaken it. And so you've got the Euro Swissy, which is also ranging, and you've got the Euro, which is ranging. So when you imagine you just put all that together, you just get a lot of junk. Euro Yen is looking potentially quite good, but you can see it's definitely in an uptrend. Be that as it may, whether it's the yen devaluing, it doesn't matter. That in this particular case, the euro is stronger than the yen. In this, even in the euro Swissy, what we have is we have a very gentle uptrend. We are producing higher lows, and we are also producing higher highs. So this is ranging, but slightly to the upside. Euro GBP, as I said, is bullish. Euro CAD, as I said, is bullish but ranging. And the beauty queen at the moment, the prom queen, is the Euro Aussie, which is beautifully kicking off into an incredible monthly uptrend. This is phenomenal. I have a feeling we're gonna probably, based on these candles, we are probably going to burst our way through the 3.8 level and head up to the 142 level, 143 level. Wow, 143 level. However, we have got to get past this level of resistance first. There's a very strong level of historical resistance here, so please be aware that at 3.8 we are overdue for a pullback. What I would love to see is encounter resistance here, pull back, and then continue up to the 142 level. That looks 143 level. That's beautiful. That is currently next to the yen pairs. This is the best chart available to trade. So for intraday traders, keeping an eye on your 4-hourly chart, because you've got to keep an eye on those cycles. They do get overextended. They do need to pull back, but look at this. Look how beautiful. This is the 4-hourly chart. Tell me you can trade this. Please tell me that you can see these cycles. Okay. Okay, you can see now we're definitely overextended. I'm not arguing that, and I know that at some point we will do a daily pullback. We will have that, so be prepared for that. But this is on its way up to the 3.8 level, so before it gets to 3.8, you've probably got some opportunities to do pivots and snipers on that chart. Once it does that, it may pull back, but it will find a level of support, so you don't trade it for a few days. Once it kicks around and heads off and goes back over the 3.8 level, you should be trading it all the way up to 4.82. Okay, so when it does a pullback, you'll get income generator setups, you'll be doing end-of-day setups, looking to go long. That's the best chart at the moment. Euro Kiwi is doing a very, very similar thing. Euro Kiwi is actually coming up here, is trying to break this. It's done a double bottom. So despite the fact that it has the potential to range, what you need to acknowledge is that it has bounced and produced a double bottom, which is a reversal signal. Okay, so it's very likely, based on Euro Aussie and how similar Aussie and Kiwi are, that Euro Kiwi is also going to follow suit, and it's done a double bottom. So basically what you need to accept emotionally is that this is not a downtrend anymore. This is now an uptrend. I know that the moving averages bias you, which is why I often look at my charts without moving averages on them, because the moving averages are going, no, it's a downtrend. Trust me, it ain't a downtrend anymore. This low is higher than this one. We've just come up, we've broken that high. We've actually done a classic double bottom reversal signal. So we are now looking at a longer term change in trend on Euro Aussie and Euro Kiwi. So I can tell you for a fact that these charts are strengthening, and that the euro is strengthening. So what you've got in all of the euro pairs is you have got ranging bullish, and you have bullish. So bullish or ranging bullish. So the euro is definitely not that weak. 5 minutes to go, guys. I want to see how much more I can look at. So those are very good charts for you to be having a look at. The Japanese yen at the moment is pulling back down to the moving averages. The real question is, will this continue? Is this able to maintain itself above this level? There's certainly a possibility for that. I'm actually looking at a trade setup today. So if you have an opportunity, you can consider this. The master traders are looking at this little candle today, yesterday's candle, as an inside bullish bar. And that being a potential sign of there's a bit of a trend line off here. It's sitting around about the support level, so it was a breakthrough of 100, which was resistance, coming back, potentially finding some support. So a lot of traders are now anticipating that we've also had a nice little weekly pullback on the yen. It's bouncing off the 10 moving average, and if we can kick off today, we get a nice little low test, or on Monday, even early next week, we get a low test and we end up kicking off there. And of course, typically we have non-farm payroll, and non-farm payroll could move the dollar and it moves the yen like crazy. So that's going to be a very quick decision. If that ends up being incredibly good news for the dollar, you're going to find that this just climbs up. Okay. If on the other hand we find it's bad news, we're going to see that pulls back a bit. So it's going to be a pretty quick decision. For the most part, this is just making sure whether the setup occurs today or not. But yes, interesting there. And so the yen is looking like a nice little setup to continue going long, and I shall have to observe it because non-farm payroll could be a swaying factor. The dollar index is looking weak, which should actually be bringing the yen down, but we have non-farm payroll on Friday. So I really want to kind of see what's going to happen there, because the dollar index is ranging, it's prone to doing one thing or the other. It could actually do anything. There's no clear trend. But yeah, so that's the setup that I'm having a look at now. And when we look at all the yen pairs, a lot of them have actually pulled back to opportunities or to areas where they're potentially looking like they want to reverse. Some have to pull back to the 10 here. We've got pound yen, which is sitting there as well. We've got Swissy yen, which is looking like it's just consolidating. It's done a little pennant. That looks as though it potentially wants to carry on going. Aussie yen and Kiwi yen are looking the most bearish. We'll have a look at those in a moment. And CAD yen is looking pretty good as well. There's its trend line. Looks like it's sitting on that trend line. Let's see what it looks like on the daily. And the daily, we've got potentially this to see if it can hold above that level. So it'll be difficult because I don't think you'll be seeing any income generator setups on those. You'll be actually, if anything, you'll be seeing income generators saying, I want to go short. But what you can see when you look at the weekly here is that price hasn't actually kicked into a downtrend yet. Here's my previous low. So we're not really in a downtrend yet at all. All right, and therefore, we just want to keep an eye on that. They still have the potential to go long. Let's quickly go through the CAD pairs. We've got 5 minutes left. We're looking particularly bullish, but the issue that we have is that CAD is quite a ranger normally. It's been trending a lot lately, but it's got these levels that it has to break through. If we can break through this level and find support, we're definitely on our way. There's something happening there. It's looking particularly bullish. Right, EuroCAD is looking the same thing, but it's also got to get past this previous high. So if it's going to range, that's the case. That's what's going to happen. Pound CAD is actually on a beautiful uptrend. This is really good. This is heading up to the 162 level at the very least, looking really nice and strong. So Pound CAD, you can see, came down to the bottom of the range, tested it again, came up, went halfway into the range, came back, found support on the inner range level, and then headed up and has broken the previous high. So that is, without a doubt, has now crossed over the midway point of the range, is now on its way to the other side of the top of that range, which is 165, close to 162. So any pullbacks on that would be income generators to go long. Be aware if you're using an ETX account that the spread on this might be quite high for snipers, but for pivots and for income generators, that's looking particularly good. And for master traders, a breakthrough of this and a retest would constitute a fantastic setup to go to the other side of the range. Okay, Aussie CAD. Now, Aussie CAD is sitting at the bottom of its range. It's a very tough one because the Aussie and Kiwi pairs are looking bearish. I mean, it's really mixing. If you look at this, you can see the Aussie is sitting right at this particular area. It's looking quite bearish, and the question is, you know, it's broken the lows, it's produced low highs, it's looking very, very bearish. We look at the Kiwi, and of course the Kiwi is also potentially looking bearish at this point, overdue for pullback. But yeah, I mean, it's a toughie because they really could turn around. If I look at go compare, say, the Aussie Swissy, we've broken below this. We were ranging, we've broken below that to the downside. So as I said, if it's a range, what will happen is it will reach just beyond the range and return immediately, which means next week this will be back in that range. And if it is, then you just unfortunately just going to have to continue holding that range. If we look at Aussie CAD, we're sitting potentially here. We've also broken below the bottom of that range, but we haven't fallen away yet. We look at Kiwi Swissy. Kiwi Swissy has just pulled back down to this level of support, potentially going to hold there. We'll have to see what happens there. And Kiwi CAD has actually pulled back quite a bit. It should have found some support up there. It seems to have broken down. It might just be finding support off the 50 moving average. Let's have a look at that. So if it's finding support off the 50, boom, there we go. Okay, so we might find that holds, that support holds. And then what you're going to find, if that's the case, is you're going to find that Aussie and Kiwi are going to start turning around and they're going to start heading back up again. And they're quite bullish and strong at that point. So it's ironic. As much as the Kiwi is very strong prior to this pullback, it was incredibly bullish. So that's why I'm saying to you, if they do turn around, they're going to move. They're going to move up quite heavily. Because prior to the pullback, prior to this so-called collapse, they were quite bullish. But, you know, I mean, there really is honestly an argument to be said for both. We've got, you know, this is a nice little, you look on the daily for the Aussie, for the Australian dollar, and what you've got is you've got price pulling back into the moving averages and looking like it wants to go short. We actually had a bearish inside bar here. So it's the Aussie and Kiwi ones for me that I'm really going to have to keep an eye on because they're sitting at they're sitting on a ledge, and they're either going to break through it and then come and retest and continue down, or they're going to reverse. But all of them are sitting on it, and typically we have non-farm payroll on Friday. So I think it's possible they're just going to hover till Friday, then make up their mind, and then next week or this week. So if you can hold off on trading those just until next week, so that you can see if they either start pulling back into the range or if they break out and then continue trending down, and then you just go with that. So I recommend that you do that. And ranges are very easy to spot on the weekly. All right. So the ones that I really want you to have a look at is the Japanese pairs, the Euro Aussie, Euro Kiwi, actually Pound Aussie as well, Pound Aussie and Pound Kiwi. They're looking like they're bullish enough they might break out of these ranges. That is a range. Pound Kiwi of the bunch is in the biggest downtrend, but I have a feeling that we could argue it might be in a range. So if it manages to break up this far, then it's not in a downtrend. It's going to head up to the 19, maybe the 2,000 mark, and then find some resistance there. So it'll range more so than trend. But there's some opportunities on the Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi, with Euro Aussie being the leader in that particular case. Then look at the Aussie and Kiwi pairs, trying to determine if they're going to jump off that out of their ranges or if their support levels are going to hold. If their support levels hold and next week they start climbing, you should be going back up with that, okay? If on the other hand by Friday or early next week they're continuing to break to the downside, then you should that trend, that weight is going to carry through. With regards to the Swissy charts, most of them are ranging, so I would stay away from the Swissy charts. And with regards to gold, for those of you who are trading it, and I recommend you aren't, you shouldn't be, we're still in a downtrend. Might I remind you that we have lower highs on the weekly. Here's a previous lower high, and what we actually have, to be honest, is here's our previous low on the weekly, and we are potentially turning around, but when you look at the daily, it's a mess. You actually have what appears to be a high and then a high low. but now price can't seem to get past this level. So the problem we have is we actually haven't got a confirmed change in trend. I know a lot of people are just buying and selling gold all over the place, and they're bleeding money, but it's really exciting to trade gold, but because there's no trend. There's just no trend here. It's struggling to get to this level. What it needs to do is it needs to break this. So once it breaks that, it'll come back and test it and carry on, and then you're heading back into an uptrend. But we haven't got squat deadly here. So if you're trading gold, you need to rethink this. That's my suggestion. I wouldn't be trading it. There's nothing really there. What are you trading? Because there's not enough moves. It's just nothing happening. So you go back and then, it's just, anyway. So that's my advice. Please don't trade it. Okay, and then, so the Swissy pairs are kind of ranging. I say that because the Swissy itself appears to be trending, but it's actually not. It's ping-ponging all over the place. It starts an uptrend, then changes to a downtrend. And and then we've got Euro Swissy, which is ranging, Pound Swissy, which is actually ranging as well. When you look at it on the weekly, you'll see that it was in a downtrend, but it's struggling to get out of this particular range here as well. Very much like the Euro, pulled back too much, and now it's ranging. So we've got the Euro ranging, the dollar index ranging, the Swissy ranging, the yen is trending, and Pound is actually ranging. I didn't mention cable, but cable is ranging as well. And we've broken out of this range for now, so we'll see what happens there. And we're still ranging on Kiwi Swissy. Okay, so we've also got that there. And again, we're ranging on CAD Swissy. So every single Swissy chart is ranging. Therefore, unless you know how to trade ranges, it's really not worth your while to trade. Okay, and so that leaves you pretty much with that. I think with cable, there's no clear trend at this point. The reason I say that is because it broke out the range. It's actually still ranging. Went back into the range, then came out the range, and now it's going back into the range. So there's no real direct trend. They traded very cautiously, please. And that's it. So your best opportunities, as I said, are on those yen and Aussie, Euro Aussie and Euro Kiwi pairs, and a couple of the Aussie and Kiwi pairs once they decide which way they want to go. All right. So otherwise, I wish you all the best. I'm going to have to head off now. Have a good week's trading, and I look forward to catching up with you next month. I'll be here for a couple more weeks before I go away on holiday, and I look forward to catching up with you next month. And I wish you all the best with trading, and just keep getting to your coaching, looking for those trade setups as well. And if you can, find a group of people that you can set up with so you can analyze the charts together. All right.